Hello and welcome to the 2024 annual review. 2024 was a strong year for the markets, but like every year, it had its shares of ups and downs. But despite the headlines, interest rate cuts, elections, geopolitical uncertainty, war, there's one key lesson. Markets reward those who stay invested. The S&P 500 was up 23%. And there's actually an important lesson here regarding the impact of currency on investing. With the weakening of the Canadian dollar, the return, when factoring in the exchange rate, was over 30% for Canadians. The Canadian markets were up 21%, and the international markets were up 13%. And that's all while the Bank of Canada lending rate dropped from 5% to, as of this morning, 3%, which is definitely welcome for my mortgage, but it does mean that the days of 5% GACs are over. And this is all when we started the year with a lot of uncertainty, just like we do today. So what should we do about it? Well, as always, we should strive to make a good choice based on the evidence and avoid reacting emotionally. So let's take a minute to remind ourselves of the evidence. What you see here is a graph showing market returns. The little red dot shows the downs that it experienced throughout the year. We see that downs happen every single year. Every year. We shouldn't be surprised when it happens. In fact, we should be surprised if it doesn't happen. Minus 14% is the average negative in any given year for the equity part of your portfolio. It will happen. And we should think about what we're going to do when this happens before it happens. And this will ensure that you don't fall victim to yourself. People are their own worst enemy when it comes to investing. So what can we do now to prepare? While I don't fall into the trap of trying to predict the markets are expensive when you compare it to historical norms. We also know that uncertainty creates larger ups and downs than normal. So what do we think was going to happen when we combine these two things? Well, I expect a very volatile market over the next few years. So that's why, even more importantly, now is the time to be making good decisions that will prepare us to endure that. And that's why we come back to my number one investing rule, is to make sure we always invest to the right time frame. Money that we need 1 to 3 years away should be in cash and fixed income like GACs and short-term bonds. Money need, 4 to 7 years away, you can start adding equity. The shorter the time frame, the higher the quality of equity. Think blue chip companies like Walmart over like a tech AI startup. And 10 plus years away, we should be shifting predominantly to a globally diversified equity portfolio. Make no mistake here. If you are putting money you need within 3 years into equity, you are gambling. That is not investing. The longer the time frame, the more risky fixed income, cash, and GACs become, and the less risky option is a globally diversified equity portfolio. If you keep this core principle in mind and make sure to invest at the right time frame, you've always had a good investment experience. It's when people go outside of this that issues arise. And they can do that for a variety of reasons, whether that be fear or greed. So what are we going to ensure that we do? First off, we're going to make sure that we diversify our investments. I only like to hold investments that I know have always come back up. When my question is when, not if they recover, that makes me happy. This gives me the confidence to do nothing during market downs. And secondly, don't react emotionally to short-term news. Headlines will always create uncertainty. We are our own worst enemy when it comes to investing. If you are investing properly, the right decision during downs is often to do nothing. It's hard because it's against human nature. And finally, stick to the plan. The best way to manage uncertainty is to have a solid strategy that aligns with our goals ahead of time. That's why we invest to the right time frame. It's not flashy, it's boring, but it's reliable. We know it works. And that gives me the confidence that we don't need to overreact to short-term news, no matter how bad it may seem. The markets reward discipline. You don't need to predict every move. Just focus on what you can control. 2024 reminded us that markets move forward regardless of short-term uncertainty. The key to success It's having a plan, staying diversified, and keep investing. Now is the time to review your portfolio and ensure you're positioned for long-term success. So if you haven't already, let's set up a time to chat and we can focus on making smart financial choices for 2025.